Good evening, everyone. Ritika, Labiba, Zainab, and Venetia. Please confirm if I'm audible to all of you. Labiba, am I audible to you?
Yes, sir, you are audible.
All right. Uh, okay, everyone. So in the last session, we have completed our chapter, journal entry. In today's class, we will be starting a new chapter, which is ledger.
Sir, will you tell us our marks?
I'm sorry,
Sir, will you tell us our marks on that day we wrote the test right?
I'll be telling you that in a couple of days. I didn't check the test yet. I'll be informing maybe probably in the next class.
Okay, sir.
Okay. So everyone, we need to start the chapter ledger, and as usual, we'll first of all start with the meaning of the ledger. First of all, we need to understand what is actually ledger is. So ledger is what it is basically a you can define the ledger as a book which is open uh, uh, to record the transaction posted in the journal. Just a minute, let me show you. Ledger. So ledger is what? Ledger is a book. Ledger is a book account that contains accounts which wherein we record various transactions. So see, in while covering that chapter, journal entry, I explained that journal is a book where we record all kind of transaction at one place, right? Every transaction is recorded at one place, that is called book of original entry or journal. But ledger is what? Ledger is a book that contains different types of account for recording different kind of transaction. Like for example, if we have we conducted we transacted various transactions. We conducted various transactions relating to purchases. We have bought furnitures. We might be selling or buying buildings during the accounting year. We must be selling goods. Right. So what do we do in case of journal entry? In case of journal, we record all these transactions at one place only, one book, one place, which is called journal. But in case of journal, in case of ledger, what do we do? We record all similar transaction at one place. Like for example, transaction relating to purchases are recorded at separate place. That will be called purchase ledger. Transaction related to purchase will be recorded separately in the purchase ledger. Transaction relating to sale and purchase of furniture will be recorded separately in the furniture ledger. And similarly, all transaction relating to building will be recorded separately in the building ledger or building account, you can call it. Sales related sales related transaction will be recorded in the sales ledger or sales account. All right, so this is the basic difference between the journal and ledger. Journal is a book of original entry. It is also called it is also called primary book, wherein we record all the transaction at one single place, irrespective of whether it is related to sale of goods, purchase of goods, whether it is related to debtor, creditor, furniture, build, anything. Everything is recorded at one single place, which is called journal. So journal will provide you information regarding each and every transaction, right? Each and every transaction in a chronological order. Chronological order means every transactions are recorded there a date wise, right? As and when transactions are incurred or transactions happen, we tend to record all kind of transaction at one single place, which is called journal. But in case of ledger, what do? We classify all similar transaction in one single ledger, other similar transaction at one at other ledger. So every transaction which is similar to the other are kept separately, are maintained separately. That is called ledger. So ledger, precisely explaining, we can call it ledger is a book which record all the similar transaction at one single place. All related and similar transactions are recorded separately. That means we will be maintaining a separate ledger for the purchase account. We will be maintaining separate ledger for sales. We will be maintaining separate ledger for building, furniture, and etc. Okay, so this is how we can define the ledger. So ledger is what? Ledger is a book. Just a minute. Ledger is a book, just like journal. Journal was also a book, right? But in case of journal, we tend to record all the transaction in at one place in the chronological order. But in case of ledger, ledger is also a book, but here in the ledger, different accounts are opened depending upon the different kind of transaction. Different transaction depending upon different transaction, different account are opened, and transactions are posted from journal to the ledger. See, if we talk about the sequence, journal entry is always come first. Only then after we can do the ledger. Journalizing is the first step, and then the transferring the transaction to the ledger is the second step. All right. So all the account put together make a ledger. So if you have to define what is a ledger, you can say all the accounts like sales account, purchase account, debtors account, all right, creditors account, goodwill account. All these different types of account are known as what? This is called ledger. Collectively, this is called ledger. Okay, now see, ledger, that is what I was explaining. Asset account, liability account, revenue, expense, capital, all these account collectively known as ledger. A ledger is also called book of final entry, since all the transactions are recorded in the book of original entry, are originally entered in the book of original entry, are transferred in the ledger. So transferring the transaction from the journal to the ledger is called posting. What do we call it? Transferring the transaction recorded in the journal to the ledger is called posting. Posting of journal entry. There are these are the few features of the ledger. Like it is the master record of all the account. It is prepared from the journal. Right. First of all, journal is prepared, and then only you can prepare the ledger. So unless and until you have prepared the journal, you won't be able to prepare the ledger. Ledger account show the current balances in all the account. Trial balance and final account. We will cover these points later. Right now, you can ignore these points. Moving on, this is the format of the account. This is the format of the, you can say this is the format of the machinery account. This is how we prepare account. Every account have two sides. This is the debit side of the account, and this is called the credit side. So debit side contains 3 column: date, particular, amount, right? And for on the credit side as well, we have four column on the debit side. We have 4 columns on the credit side, including journal folio. So date, particular, journal folio, and amount. And on the credit side, we have date, particulars, journal folio, and amount. All right, everyone, is this clear? Ledger is what? Ledger is a book that contains various different types of account to record all the transactions of the journal. All right, all of you, is it clear? Yes or no?
Yes, sir.
All right, everyone, please note this down quickly so that I can move to the questions of the chapter. Just note it down and let me know whenever you are done.
Sir, done.
Done, everybody?
Yes, sir.
Yes, sir.
All right, please note this down as well.
Sir, done.
Done, everyone?
Yes, sir.
So basically, all the different types of account are collectively called ledger. Asset, liability, revenue, expense, and capital, all of these are collectively known as ledger. All right, and please write this point as well. A ledger is also called book of final entry. And since all the transactions are recorded in the book of original entry are transferred in the ledger.
Done, sir.
Okay. All right. So moving on to the next point. Uh, let's not write down the features of ledger for the time being. Let's just skip this point. We'll cover this point later. Now see, this is the format of the account. All right. So this is how we prepare account. But every account have two sides. These four columns come under the left side of the account. These are called left side of the account. And these four columns are the credit side of the account. Left side of the account is called the debit side, indicated by DR. Whereas right side of the account is called credit side, indicated by CR. All right. Now see, let's let me show you how do we actually prepare uh, prepare any account. As I just told you that first of all, every transaction is journalized. The first thing that we need to do is, first of all, every transaction need to be journalized. Once the journal entry is done, then we post the same journal entry into the ledger. Right. So like this example, it says that on 5th of June, purchase furniture from Mehfil Mart 40,000. So there is one mart which is called Mehfil Mart. From that mart, we are buying 40,000 furniture worth of 40,000. Right. So what? Anybody, please tell me the journal entry of this, please. Could anyone please tell me the correct journal entry for this? We have bought furniture from Mehfil Mart.
Furniture
40,000.
account debit.
Yes.
Furniture account debit to Mehfil Mart account.
Perfect. Since the name of the seller is given, na, so it shows that we must be buying the furniture for on credit. So the journal entry for this will be furniture account debit to Mehfil Mart account. Now see, in this journal entry, two accounts are getting affected. First of all, furniture account is getting affected. At the same time, Mehfil account is also getting affected. What is happening to furniture account? Furniture is increasing, and at the same time, Mehfil Mart is also, see, Mehfil Mart is what? Mehfil Mart is our is our creditor, right? Since he allowed us to buy the furniture on credit, so this is our creditor. And furniture is what? Furniture is an asset, right? So in this transaction, what is happening? Asset is increasing and creditor is also increasing by 40,000. Yes or no, everyone? Yes or no? Everybody understood this point? This is the journal entry of this transaction. Everybody understood that this transaction is affecting two aspects. Firstly, it is affecting the asset as well as it is affecting the creditors. Asset is increasing and creditor is also increasing by 40,000. Is this point clear to all of you?